All right, let's get a check on what's happening in the crypto market now. If you look at the screen, it's mostly green on the screen with little pockets of red right there with some altcoins pulling back. But we see Bitcoin there on the tier, 1.31%. Ethereum trying to get back above that $2,500 level, 0.81%. BNB, that's the native currency for the Binance Exchange, 0.8% up. So we're seeing some moves there by the bulls in the market. We've seen some buy interest. Let's look at the sentiment. How the traders feeling today? We know it was neutral and tending towards fear the last time, but it's back on smack 50 neutral. That's for the fear greed index. For traders, trying to find entry and exit into the market. That's your sentiment right there in the market. It's neutral. Let's look at the top cryptocurrencies that we track. We see Bitcoin there holding up 1.31%. For the top cryptocurrency we track there, Cardano, 35 cents, up 1.69%. XRP, we've seen XRP on the SEC there. That's majorly in the news right now, but still holding up at 53 cents. Is it a security or not? For now, it's not a security. That's according to the U.S. Securities and Exchange Commission, but we still have that ongoing court case there between XRP and the SEC. Let's get some top headlines now. We see recent revelation there by the owner, the CEO of Telegram. That's after he was arrested. That's Pavel Durov. It was reported he hinted that the platform is not that free from surveillance. From what he said last time. We say it's not that much of a safe tool, for criminals, as some had assumed. He confirmed that Telegram's process for disclosing IP addresses, when legally requested, had been in place since 2018. So your IP can be traced with Telegram. That's what he's saying. Now we're seeing crypto sponsorship in the English Premier League. Crypto firms have spent a record amount of 130 million pounds on deals for the Premier League season 2024-2025, and that's according to sports sponsorship agency, that's SportQuick. So we're seeing a lot of crypto ads there in the EPL. The United Arab Emirates, they've made crypto transactions and conversions VAT-free with amendments to its value-added tax regulations. The change is to take effect from January 2018 and solidifies the UAE's position as a leading crypto hub. So those are the top stories there in the crypto market. Let's bring in Gilbert, your partner, our financial market analyst. Hello, Gilbert.
Yeah, greetings, Mr. Ladi. Great to be here.
Yeah, it's great to have you. So, yeah, we're seeing VAT-free cryptocurrency transactions in the UAE. What potential advantages does this tax reform offer to, crypto investors and, mostly businesses in the UAE?
Okay, first of all, I think the tax reform, which is eliminating taxes in crypto, is a significant shift for the United Arab Emirates and also for the cryptocurrency industry at large, because it offers significant benefits to businesses, which I think one includes increase of profit margin. Another is tax reclaim. So businesses in the United Arab Emirates that have been running since 2018 can actually apply for a reclaim of taxes that they have paid. And this is going to encourage business growth and also the growth of innovation, attract more global investors and also talent. But then a tax-free environment typically always reduces compliance costs. So this is also great news for businesses there. It will also boost liquidity and I think more than anything position the United Arab Emirates as a favorite destination for crypto companies. We've had where Seychelles was the favorite destination, at some point Malta, and now we are having the United Arab Emirates making a more friendly environment and encouraging more of a migration of crypto businesses into their country. And then when we look at the assets they are dealing with, we're looking at Bitcoin that has a fixed total supply. About 94% of the supply is already gone, 6% that is left, and it's going to be mined within the next 116 years. And then the minimum Bitcoin that comes into circulation daily is about 450. Governments around the world buy an approximately 550 a day. So this is a wake-up call for countries, entrepreneurs, investors, to wake up and understand that this is one of the greatest assets of our lifetime. And I think the United Arab Emirates understands this. I expect other countries to follow suit, just like former President Donald Trump have said a lot of great things he's going to do and position America more like the hub for crypto. But so far, we see the United Arab Emirates, leading in this. But then they may be the first, but I still believe that we will still have other countries follow suit.
Right, and definitely exempting most of these crypto transactions from VAT. That means the government is going to be missing out on that revenue. Is it that the government there and the UAE, they're too rich at this point? What are the benefits to the government?
Okay, typically this is going to boost foreign and direct investment, in the United Arab Emirates, while positioning them as more like the global hub for crypto in the world. Also, more of economic diversification. I think this is going to reduce their reliance on oil, and position more how they could take advantage of the fintech, crypto in this case. And then, of course, job creation. The establishment of more crypto businesses in the country is going to further stimulate the economy, increase also the consumption of domestic spending. And the other way around, United Arab Emirates is a major country that makes revenue through tourism. So the fact that we are going to have heavy migration of crypto businesses there, major events and conferences around the world will be held there. There's going to be increased consumption and domestic spending. So the United Arab Emirates has a lot more to gain from making policies that will rather encourage the migration of crypto businesses and capitalists from other countries to theirs.
Does it put the UAE at more risk now when you see most of these crypto businesses moving shop there? And what about the bad actors? Do you think they're able to handle most of the bad actors in the crypto industry?
Okay, one thing is that the United Arab Emirates is one country that has been able to make a very clear regulatory framework, not just that it covers, it's just like, other countries we see where the commodity market, they are in and claiming rights to regulate the market. We also have the Security Exchange Commission, who is also claiming rights to regulate the market. But the United Arab Emirates is one country that have been able to bring out the framework directly for the cryptocurrency market. So regulators are always in the marketplace to protect investors from bad actors. At the same time, there's another way to do it anyway, because I believe that the more regulated the marketplace is, the more it increases access to investing from most retail investors is always made available for accredited investors. But then the United Arab Emirates has a framework that is there to guide and regulate the cryptocurrency industry over there. So yes, the eyes of the law and the regulators are in the market. So I think that having a more robust regulatory framework like theirs, it's there to actually hunt on bad actors who want to play in their country.
Right. I guess it's time to look back to September now. Most of the central bankers are going to be expecting inflation numbers. And for Thursday, we know the U.S. is actually CPI day, in the U.S. So do we expect volatility, and do you think this CPI data might not be what investors are expecting? That's for September. Do you think we might see an uptick there in inflation in the U.S.?
Okay. The United States of America have had inflation as high as about 9%. And has pushed it to as low as the last one we saw, which was 2.5%. And then the last PC data, which to the Fed is their favorite gauge for inflation, not even the CPI, came out at about 2.2%, which is the lowest we have seen since February 2021. And then we've had rate cuts that happened. We just had a rate cut. And then we had a job number which came out strong. A job number that came out that strong it's something that is quite encouraging. So I expect, the job number is about 254,000 new jobs. That's a whooping number of jobs added into the economy. So with the job number that we had, I'm expecting that we are supposed to have more of a slowdown in numbers of inflation numbers following such strong job reports. And then, so I think it's going to bring some volatility, more of a positive one, because I believe that the number that will come will be lower and not higher to enforce or reaffirm that we are going to see a rate cut by next month following the FOMC meeting. But then the job number that we had suggests that we may not see a massive rate cut just like we may expect. So there are more possibility of us seeing a 25 basis point from next month's rate cut. But then I think that we are supposed to have a positive inflation numbers coming out on Thursday, and then the market is well positioned to reflect this. Bitcoin, even though we started on a bullish note, I think that we have very key areas that we should watch out for. First of all, is the 60K, 61K. But many persons were expecting it to break, during this drawdown that we had. But the reason we did not have that is because after the last rate cut, it led to a lot of buyers entering in, and then they have a position that has been able to hold that 60, 61K. So why there is a question of, will we retest that? And then if we do, will it break? We still have 65, 67K. That still happens to be another major resistance. So these are zones we should watch out for. For us to be able to break that 65, 67K, I believe that we should have more of what technically is called the bullish ascending triangle. If we have that, then we'll be able to break. But then I think the market is well positioned to give us some volatility after the release of Thursday's CPI number, because it's going to inform and reaffirm what we will price in at about next month rate cuts.
Right. I know investors will also be looking out for what was said at the last FOMC meeting. Do you think, we're still going to see forward guidance that's going to show that the Fed is ready to stay dovish, when it comes to increasing interest rates?
Honestly, what I think is that the Fed want to start to increase monetary policy. This is what they want to do. If you look at, when we go for FOMC meeting, what we try to look out is clues. So we're looking at the face of Jerome Powell. We're also looking out for some numbers. It's like a poker game where you're looking at the face and you're looking for clues. And so far, the kind of clues that we are having shows that the Fed wants to start having more of a push towards the dovish stance, so it will lead into increase of monetary policy. And so I think that, yes, next month's FOMC meeting will still give us more of a dovish stance. And then, the more that stimulates more currency into the marketplace, at the end of the day, it's still going to end up in the marketplace, because institutional investors and traders will have access to more of these loans. They will have access to this money as loans at a very low interest rate, which will end up stimulate the marketplace. So I think debt, the debt market is about to have volume flow from the debt market back into the stock market and then crypto at large. So I think it's right for me to say we should be expecting risk on money in the marketplace. And if you look at the policy, if you look at the decision, if you look at the how aggressive the last rate cut was, you should understand that I think we are moving into a more dovish policy and trajectory right now.
Right, and I'm sure investors, might be excited, thinking that, the central bankers are moving into a rate cutting cycle, so everything should be good. But we still have tension in the Middle East, and we know how geopolitics, impacts risk assets. So is it time to just, pack up, for most of these risk assets, expecting, this tension might not de-escalate? And I was talking about the Middle East.
Okay, I think that the market will always correct hourly, the market will correct daily, the market will correct on a weekly, the market will always correct even on the monthly. But then if volatility is going to be your problem, then I don't think that such investors should be investing in such marketplace, because the market will correct. But then, should you allow short-term drawdown either to the upside or downside affect your long-term position? As a trader, as traders, short-term volatility shouldn't be a problem, because if you have confirmed that the trend is going to the upside because of the war, you go long. If you believe that it will go to the downside, you short the market. But for investors who understand seasonality, understand timing, understand market cycle, you understand that the cryptocurrency market is moving into a new cycle.
Right.
Just like also the dollar also has reached the peak of its bull market. The dollar was in the bull market during the aggressive rate hike, but then it has reached its peak. So the cycle is reverting, and now while the dollar is losing, that aggressive hike it was having, we are rather seeing the cryptocurrency market positioning itself more for an upside move. So investors should not worry over some short-term volatility that may come from the war.
Right.
We should be positioned more for the long-term trajectory of the market.
Right, I do keep saying it. It's definitely not an easy time to be an investor in most of this risk asset. But thank you so much, Gilbert Okpata. It was great having your perspective again today. Thank you.
Yeah, thanks for having me.
All right, that's the show today. Those are how most of the major markets we track are looking. You can watch us again on our YouTube channel. You can also continue the conversation on X. Just search for Channels Television. I'm Ladi Williams. Thank you so much for watching. Bye-bye.